Gold prices are continuing their rise on Thursday. We have Gary Wagner in Chart This. Gary, thanks for joining me today.
My pleasure to be here, and we're finally getting an exciting week to report on.
Yes, Gary, finally. So obviously gold prices went up above $1,200 yesterday, but reports are still pointing to choppy trading in coming weeks and coming months. What are the charts telling you, Gary?
Well, I think that these analysts might be clued into something. I also believe that we could certainly see a continuation of not only chopping trading, but this defined trading range that we have with, the new lows at 72, 82 in that area. And in terms of the highs, now we got a tremendous pop on Wednesday, took it right through 1200. That's exciting news, but the real news that we need to see is follow through.
And that brings me to my next question, Gary. What levels are you looking at for gold to close this week to keep this rally sustained?
First of all, we got to close above 1200, and that's tremendous news. We need to hold that level, obviously, as a new support level, as opposed to, say, 82 or 92, 1192, 1182. But on the upside, we are now back to that upper end of the range. And as long as we do not have that follow through that we just spoke about to break above that, we could still be range bound.
Now, we do know that you focus mainly on the technicals, but right now, what do you see driving the gold price? Is it just poor data points?
Well, it is data dependent, but it is because we pair gold against currencies, and we've seen that tremendous rise in the dollar that put so much pressure on gold. Now we're seeing the dollar falling. I think the big story here right now is the euro dollar, because the euro dollar has been so excessively strong. Now we'll have to see if it can keep that, because we have a scenario in Greece that will come up again in 2 weeks. Of course, a payment was made, but the key right now is that we are driven by data. We had some weak economic data coming out of the US that sparked this, but it was really the sagging dollar that really precipitated this upside move that we've seen.
All right, Gary, let's get to your inserts. It's been a while, so what do you brought for us this week?
We're going to look at a couple of things. One, I want to look at the range that gold's trading in so that viewers can see in a graphic sense really the range that we're in, what we need to do to break out of that range. But we're also going to look at the euro dollar. On other occasions, we've looked at the dollar because it had such a heavy influence. And now that the euro dollar is providing us with really some strong movement to the upside, pushing the US dollar down, we want to take a look at the euro dollar and look at some of the ranges that might trade in.
Perfect. Let's get to it.
All right. There is no doubt we had alarm clocks ringing off on Wednesday, May 13th, as we finally saw gold substantially move off of the recent lows. Those recent lows were below 1200, 1182, 1172. Those were different support levels. And the real question now is whether or not we will witness any kind of a sustained rally off of this most recent move, or if we're simply at the top of the trading range. And a case can be made for both, because unequivocally we need to see certain things happen before we can say with some certainty that we are now entering a rally phase in gold. So to really take a look at Wednesday's move in context of where the market's been and where it might go, I draw your attention to the chart that we're looking at. This is a half-a-day chart, or 720 minutes. So each candlestick represents a half a day of trading. And in this particular chart, I've added a basic fib retracement from this top up at around 1308. Down to our bottom at roughly 1140. When we do that, there's a couple of key areas, but the key area that I do want to draw your attention to is the 50% retracement point, which comes in roughly at 1221 to 1223, because this particular price point is a price point that we have seen provide so much resistance to the market, not on a single occasion, but on multiple occasions. We've had two prior to this. We had one recent rally which took us past, call it 1210, no cigar, and then this most recent rally which we had on Wednesday with a high of 1219. Now, until we see the market break above this point, I believe on a closing basis, we can't say with any kind of extreme certainty that what we're looking at is the beginning of a defined and prolonged rally. We certainly know what it's like to be through in the most recent history a defined and prolonged contracting or correcting market going to lower pricing, as we saw this market move from above 1300 to below 1200. The market then did recoup, and it recouped up to this 50% retracement point, but that traders was back really the middle of March when that occurred, and since that point, in other words, all throughout April and the beginning of May, we've seen this market traded within a defined trading range. So yet another way to take a look at this market is through the eyes of a daily chart, and I've pulled up a daily chart in Japanese average format. And what we can see is over the last couple of days, there's absolutely no doubt we've had a defined and the beginning of a potentially sustained move or a rally to the upside. However, without closing above 1220, 1219 in that area, we do not have any kind of technical evidence that what we'll witness is a sustained rally. However, if in fact over the next few trading days we do see this market close above this critical point at 1220, 1221, the next areas or targets that I would look for would be 1240 based upon these tops here, up to 1230 up to about 1240, and that's based upon these tops that we saw back in December of 2015. That's the last time we've seen it above this particular area. However, if we do not see the market take out these areas and in fact run into some resistance, we will probably see this market make a play for the lows. In other words, this area to me is very critical, and if we have this market falter at this point, in other words, we had this rally which began at around 1170, goes sideways, then we get this clip up. If we do not have the ability to have a sustained close above that, we'll probably see this market head lower and possibly go ahead and test that 1170 again. In other words, stay within this defined choppy trading range. If this is the type of analysis that you think will aid in your investing, your understanding of the market, and your trading, I invite you to go to our website, thegoldforecast.com, and there you will see a button that will allow you to sign up for a free trial and get our daily video newsletter all of next week. Again, whether or not we will witness a sustained rally in gold or if we're witnessing a flash in the pan.
And thanks for watching this edition of Chart This. Any comments and questions are always welcome at newsfeedback@kitco.com. Have a good one.